Let me ask Kevin to kindly also give his introduction remarks before we go into more interactive discussion.
Thank you very much, Iman. Just sitting here listening to Faisal and Malek talking about the digitalization and really the transformation that's taken place in the Middle East, it made me think about where I fit into this conversation, because obviously you've got the Bapco refining side of things, which is a very physical, very tangible asset. We've got Fujairah storage, which is also a very tangible physical asset and a very tangible and physical activity involved in the storage and movement and blending and so on of products and crude. And then you've got me from Kpler, which is a digital company, a technology company, which isn't a physical asset in the same way. And I think the interesting aspect of this is that each of those elements of this panel fit together very well in order to create a complete picture. And what I mean by that is, if you understand what's happening in the refinery, because you're looking at product cracks, you're looking at margins, you're looking at your linear program and your planning and so on. If you understand what's happening in storage, because you're able to, you have access to tanks and so on, then the one thing that you're left needing to have is access to information. And that's where Kpler comes in. And that's where, we provide people with the ability to understand what's happening in markets. We've said this in the past, and it's becoming more and more the case that transparency is bringing about effectively lower volatility and lower risk. It's allowing people to understand markets much more clearly, much more thoroughly. And with that understanding, effectively, we get to a situation of commoditization of information. It's very much the situation that if you don't have access to the information that a company like Kpler puts out around inventories, supply and demand, arbitrage, etc., floating storage, all of these things, then you're actually at a disadvantage. And one of the big transformations that we've seen at Kpler itself is the way that our client list has grown and the kind of clients that really are getting involved in our business and getting involved in a relationship with us. At the start, it was very much around physical movement, right? So as you'd expect, the multinationals, the majors, were very keen to understand what was happening within sort of the commodity tracking space. And in fact, going back sort of 10 or more years, it was companies like BP that actually started with the pioneers of cargo tracking, using AIS transponders in order to understand exactly what was going on around the world, which vessels were carrying which products and where they were going. And that started, and I remember my own interaction with it, sort of 10 plus years ago. It was a very basic kind of activity. You looked at individual vessels and you got information on an individual cargo. And what companies like Kpler have done over the last 4, 5, 6 years is use all of that raw data, but use technology in order to aggregate the data and turn it into something that's really meaningful. And when I say meaningful, it's effectively when you have access to commodity flows rather than just cargo movements, you start to understand what the marginal barrel is going to do. And when you understand the marginal barrel and where the marginal barrel is going to go to, then you start to get a clearer idea of what price direction is going to take. Or what direction price is going to take. So it all fits into that complete picture that I mentioned earlier. So within the panel here, I'm absolutely delighted that we've got this balance. We've got the refiner, we've got the terminal tank owner, and you've got me to chip in a little bit on the technology side.
Let me ask Kevin. Kevin, what is Kpler bringing to traders? You talked in your introduction about a few of those, but I want you to elaborate in terms of what beyond cargo tracking is Kpler bringing to traders, and what's next, and how this has impact on prices and price assessment and all of that. If you could elaborate on that.
Yeah, I sort of hinted at this during my introductory comments that Kpler started off as a cargo tracking company looking at the LNG market. There was a space in that market at the time for someone who could come in and effectively give more information to the LNG trading community. And over the last sort of 5 or 6 years, Kpler's activities have expanded massively. So we started with just cargo tracking, right, and aggregating flows. But we've now added, obviously, we've moved into the crude market. We're into the clean and dirty products markets. We track the LPG market. We're also looking at dry bulks, and eventually we'll start to look at the ags market as well. So soybeans and corn to China, etc., are all on the list for the future. But we don't just look at the cargoes, and we don't just look at the vessels. We look at inventories. So we use satellite imagery in order to get inventory numbers from pretty much every storage installation in the world. And we use effectively a relatively simple technique of just looking at diameters and the depth of a floating roof in order to work out how full a tank is. Now it seems, or it sounds, very simple, very sort of rudimentary activity. But once you build that up into a complete picture, and I use that phrase a few times advisedly, you create something that is tradable. And so for the trader that's looking at our information, they understand immediately what is happening on inventories in the States or inventories in China. I mean, if you take China as an example, this year, the Chinese procurement or acquisition of crude has been ravenous. They've been starving for crude, and they've taken advantage in a very opportunistic way of a market that was pricing cheaply and had too much, just too much crude. It had surplus crude coming out of the Middle East. That was going back to sort of March, April time, when the Russians and the Saudis couldn't quite get on, and they both opened the taps, and the world ended up in effectively a very cheaply priced crude environment. So the Chinese came out and bought a huge volume of crude off that market. And that crude had to go somewhere. It couldn't all go into processing immediately, so it had to go into storage. Now, Kpler data allow you to see what that storage level is. And I can tell you that over the course of the year, the storage levels went up from around 850 million barrels at the start of the year to about 950, 960 million barrels now. And of that, about half is in strategic petroleum reserves, so it's effectively held by the government. And then the other 50% is split between refinery and commercial storage. Now, if you want to understand what's happening to crude inventories around the world, you need access to that data. You need to have reliable information that isn't just data, but is intelligence. And then you can make that into a tradable, I'm not going to call it a trading signal, because it's not a pure trading signal, but it's part of what builds up your trading view. And that's where Kpler comes in. Now, what's going to happen with us in the future is our technology will continue to improve. I talked about some of the markets we're looking at, so the dry bulks, for example, and the ags, but across the spectrum, whether it's crude, product, LPG, etc., our technology is improving all the time, and our access to information is improving all the time. Because I mentioned sort of satellite imagery, and I mentioned AIS transponders and so on, but in actual fact, an awful lot of the information that Kpler uses comes from our partner companies, so inspection firms, agencies, ship brokers, charterers, traders, etc., that give us information that enable us to build up a much more complete picture. So where we started with just cargo tracking and AIS and satellites, all of a sudden now we're much more embedded in the market, and therefore we're able to give a much more, and I'm going to use the phrase again, complete picture of what the balances look like. And if you understand the balances, then you understand price direction. And that ultimately is a very valuable trading tool. It's part of a suite, if you like, that an analyst and a trader builds up in order to establish a market view. And once you have a market view, well, then I'm not going to simplify it by saying, but then the next key step is to use that market view in order to make sure that you position yourself in the most profitable way possible. So as Faisal said at the start, or during his remarks, Watco look at markets in order to understand the optimal time for maintenance, the optimal location for their cargoes to go, etc. So once you build up all of these different parts of the picture, you're able to make a much more comprehensive decision, and you're able to manage your position and your exposure and your risk and everything else in a much more complete way.
You mentioned in your introductory remarks the impact of transparency and digitalization on controlling the volatility or lowering price volatility. I can see that. I want you to elaborate a little bit on that. However, I want to also argue that higher transparency may, as you rightly mentioned, lower the price volatility, but it creates visibility for those who contribute to price setting and the traders to react faster and to see that basically the how should I say, marginal barrel that is coming to the market. So it adjusts. There is a faster price adjustment mechanism with increasing transparency, which would then help the market to adjust the prices sooner and faster to any signal from the suppliers that are shown in the market visibly through the barrels on the water, because most of the supply is what comes to the market. What stays in a country doesn't really have massive impact on the prices. What comes to the market through perhaps shipping is what's a signal that the market is tight or long. So if you could add a little bit on your price volatility reduction, that would be great.
Yeah, I mean, the point I make about transparency is probably a similar point that would be made by someone from Platts or from Argus. And that's that by bringing transparency to markets, you enable price discovery, right? The assessment of a market price, you enable it to become more accurate and more reflective of what's actually happening in a market. Now, I'm sitting out here in Singapore, which is obviously the price setting center for pretty much every barrel of certainly of refined products, from Saudi to South Africa to Australia to Japan, in a huge sort of rectangle of the world. And when you think of the population that sits in that rectangle and the amount of product that we're talking about, then price assessment becomes absolutely crucial. And I can only think that transparency around price assessment helps in that whole situation. It means that, as I say, prices are much more reflective of market fundamentals. Now, a company like Platts will quite happily say that their window methodology is open to everyone. It's clear, it's transparent, etc. So that creates, as I say, this price that is, or this mechanism rather, that allows for price reflectivity and price clarity. And that means effectively that, you know, participants within that market, whether they are suppliers, consumers, or traders, can all see they can see why the price is, not just what the price is. And I think that's one of the fundamental distinctions that I like to make about transparency and about understanding the market, because anyone can look up a Reuters screen and say, right, Brent is trading at $43.56. I've not looked today, but let's say, for example, but that's only what the price is, and you need to understand why the price is. Where is it going to go tomorrow? Where is it going to go next month? Where is it going to go next year? And that effectively, you know, that transparency that's brought about by companies like mine enables people to make much more reasonable and rational, logical decisions. It enables planning to take place. So we talked about refinery planning, but it also allows for investment planning, right? If you're a BAPCO, for example, and you're thinking about putting in a new upgrading unit, let's call it, I don't know, a new hydrogenation unit or a desulfurization unit or a new coker or anything like that, you need to have concrete bases, concrete foundations on which to build your business case. And so if you've got price transparency and you've got transparency of a market structure and the forward curve, then that just helps. I can't see how that is in any way anything other than virtuous.